We're here with Bryan Beatty, a certified financial planner and partner with the Northern Virginia-based wealth management firm Egan, Berger & Weiner. Good afternoon, Bryan.
Good afternoon.
Bryan, a lot of people across the country are shocked when they go to the grocery store or they're paying their energy costs as they begin to see creeping inflation. Can you tell our viewers what exactly is inflation?
Very simply put, inflation is an increase in a monetary supply. It doesn't always manifest itself in increased prices, but it leads the way to increased prices.
Why should your average American be concerned about rising inflation?
Well, I think you need to be worried about inflation because the amount of capital that we've injected into the banking system is unprecedented. And obviously it was done for good reasons. COVID-19 shocked the world. But the Federal Reserve balance sheet has been moved from about $3.8 trillion to over $7.6 trillion in less than 1 year. This has the potential to create significant amounts of inflation, which would mean that you would not be able to afford to buy as much as you bought last year this year.
In April, you published a piece that can be found at EBWLLC.com with the title, "The Concern for Potential Inflation Has Been Steadily Rising." Today, we learned that the Consumer Price Index is up 4.1%. Talk to us about what the government budget looked like going into 2020 versus the post-pandemic budget for 2021.
Sure. Now, the baseline budget for the federal government spending in 2020 was $4.6 trillion. The total economy is about $20 trillion, so it's almost 25% of the economy is direct government spending. And in 2021, we find ourselves with about $6.9 trillion in government spending, or a deficit of approximately 19%. We haven't seen a deficit like this since 1943. We were in the middle of World War II. Obviously, we knew what was going on at that time. So this is unprecedented spending in peacetime. So think now in terms of the two additional bills that the Biden administration would like to pass, the Family Act and then an additional stimulus for infrastructure. That's an additional $4 trillion on top of the 6.9. We could be spending close to $11 trillion in 2021 if these bills pass. So clearly very stimulative and likely could lead to a spout of inflation.
Who is hurt most by inflation?
The individuals hurt most by inflation are fixed income investors, those already in retirement, living off the interests and dividends of their portfolio. And those who are renters are also negatively impacted by inflation. If you own your home, your mortgage is pretty much fixed. But if you rent, your rents are going to escalate. And so you have to be very mindful of inflation when thinking about your monthly budget and what things are going to cost you in the future.
What does inflation mean for individuals' IRAs, their 401ks, their retirement portfolios?
I think people have to rethink their idea of risk. In the last 20 years, we've been in sort of a deflationary environment, fighting deflation during the credit crisis of 2008, fighting the deflation of the consolidation and austerity in Europe, fighting the deflation of COVID, and now we are in the grand reopening, if you will, globally, and there's all this excess monetary stimulus. I think that now there's a shift going to take place where we're moving from a deflationary standpoint, where you favored bonds and you shied away from stocks as interest rates declined over a 30-year period. We're now probably into a paradigm shift where interest rates are going to begin to move up and for an extended period of time, and you're going to have to change your bond makeup and maybe lean more heavily into equities. Certainly, if the inflation becomes a real thing, the dollar is going to weaken, and so you're going to want to favor foreign investments and emerging markets more than U.S., certainly more than you've done in the last 20 years.
If an individual out there watching this video wanted to get in touch with Certified Financial Planner here at EBW to have them look at their portfolio to assess it for susceptibility to inflation, how would they do that?
Well, you can get in touch with us by calling the office at 703-506-0030 and schedule a meeting with an advisor in our office, or you can reach us at info@ebwllc.com.